Quant Network wants to become the invisible layer to connect finance, every blockchain, bank, and network. It aspires to connect it all, to become the bridge, the tunnel to connect it all, to work as an operating system, folks. Anyways, we're going to be looking at what Quant Network has been up to and what everyone is saying. But at this moment, folks, the overall market, as you all know, is a bit choppy, volatile, extreme fear is in the market. For that, we're going to be looking at this video. Anyways, the crypto authority says that QNT this cycle isn't going to be amazing. QNT on 2030 will be amazing and beyond, basically. Remember how fast the previous 5 years of your went by? So, stop staring at the 1 hour chart, look at 2030 and basically beyond. So, let's check this out. Yeah. Stop obsessing. Hoskinson over here says, stop obsessing over red candles. The long-term direction is locked in. 550 million people in crypto now, a billion by 2030, and trillions of stocks and bonds moving on chain. So we're talking about trillions of dollars, folks. And he says that even 1 trillion is not enough. 10 trillion plus, folks. We should be looking at the bigger picture. Will it come or not depends on the trajectory of the market, of the projects that we talk about. But the potential is indeed there when mass adoption happens.
Crypto is the opt-out. Crypto is the exit. Crypto is the solution. And so, yes, the markets go up and yes, the markets go down. But you know, there's some directionality to that. The long term, we win. There's 550 million people in the cryptocurrency ecosystem, and there's going to be a billion by 2030. A billion. The majority of the world's stocks and bonds and equities will be in the cryptocurrency space by 2030. And all of y'all paper hands are just running around. Be like, oh no, the markets are falling, the markets are falling. What do I do? What did I do? We all headed for 10 trillion, guys, because trillion doesn't even mean anything anymore. The dollar doesn't mean anything anymore. Everything ought to be priced in crypto.
Folks, looking at the inflation, looking at the unlimited supply of dollar, anything can happen, folks. But different people are saying different stuff. Look at this. Despite extreme fear in the markets, Tom Lee remains keen that the S&P 500 will reach $7K and BTC will rebound by the end of 2025. It depends. A lot of people are pessimistic, a lot are optimistic. It all depends. You have to do your own due diligence. You have to research because to be honest, folks, we can only look at the fundamentals of a project or a market as a whole. We cannot see exactly where the price is going to be. We can only do some sort of speculation. Some people's speculation is right and others are wrong. And to be honest, nobody knows 100%. So you have to do your own research and only ever invest what you can afford to lose. That is the mantra. Anyways, let's check this one out and then we will head forward.
I think we're still seeing the repercussions of that April 10th crypto deleveraging event. It was the biggest deleveraging event ever. And there are still, I think, some market makers that have some balance sheet issues that are trying to raise capital. So I think that this is leading to a market that is kind of raised. Every time we get a bit of a rally, there's some capital trying to be raised. And I think that's what's suppressing crypto for now. That's, of course, going to end soon, but I think that's led to why crypto has underperformed equities since October 10th.
Can crypto treasuries, like yours, for example, can they trade as well or in tandem with a cryptocurrency itself, or does one have to trade at the expense of the other? If I'm going to see money flow into Bitcoin or crypto treasuries, wouldn't it then come out of the actual pure play coin itself?
Not exactly, Scott. For instance, when Bitmine has shareholders and institutional capital comes in, and J.P. Morgan, Invesco, BlackRock are buying big stakes, then that capital is then used to buy Ethereum. So it's actually going back into the ecosystem, but then it's going into a vehicle like Bitmine that's actually a permanent holder. Bitmine owns 3.5 million Ethereum, more than 2.9% of the supply, but now that is not going to be subject to liquidations because there's no leverage used to hold that Ethereum. And then at some point, that 3.6 million or 3.5 million Ethereum is going to be staked and then generate nearly $400 million in net income. Well, that can create returns for shareholders. So in a way, a crypto treasury is actually a pretty attractive equity because there's an income component, plus there's, of course, that ability to grow your Ethereum holdings per share.
But what if crypto treasuries become more favored than crypto itself? There's no negative impact for either the way that Ether or Bitcoin.
Folks, no matter what happens in the future, for now, whether somebody agrees or not, I think the market is really volatile. And to be honest, nobody knows where it will go. It can rebound from the 90K, 95K levels, or it can go to 75K, like some pundits are saying. Obviously, folks, to be honest, we should be looking at the fundamentals. I still think that this industry has something special to offer in the future because the digital world is the future, and obviously good projects can bring about the change. Obviously, we want to see the change. I am with you guys when I say that we truly want this industry to survive and provide something of value in the real world, aside from being known for really, aside from having a really bad reputation about various stuff. We want projects like Quant Network to be that change. Basically, look at this: QNT hidden in plain sight. The top financial giants in UK recently came together for a UK retail payments plan, from financial regulators to central bank all the way to the sovereign treasury. The biggest highlight point: interoperability via standard messaging formats. And the new format ISO 20022, Quant Network is complying with that format, that's for sure. Anyways, check this out. This is the Financial Conduct Authority, Bank of England, PSR, Payments Systems Regulator, HM Treasury, Strategy for Future Retail Payments Infrastructure. Andy, if you do not know, folks, Quant Network is tight when it comes to Bank of England. We've discussed Project Rosalind, the digital pound, CBDC testing, and whatnot. Anyways, reduce barriers for consumers and businesses making cross-border payments, for example, through improved international interoperability via standardized messaging formats and supporting stablecoin payments. Awesome. Check this out. Crypto backing over here says that most people still don't understand what is coming. QNT isn't just a crypto, it is the key to connect every blockchain, bank, and enterprise. Quant is sort of, at least wants to be the invisible layer running it all. So this is what we're talking about, and there are quite a lot of optimistic price predictions for Quant for the long haul, folks. Will it reach these levels, $7,000 or not, from 83.55? It is obviously it is yet to be seen. Depends on who you talk to, but the potential is there. The Quant Network and company, the team, they need to just develop constantly. Now look at this. Wordian G. Big shifts don't happen often, maybe once every 30 years, and this is one of them. Basically, Quant Network can be one of them. Let me increase the volume. What is the one thing banks need to unlock global blockchain adoption? So basically, Quant Network and and the projects that we cover, they indeed want to cover this adoption, unlock global blockchain adoption, and be that invisible layer in the process.
Yeah, we've been very familiar with firstly LACchain and then later LACnet. I mean, we were very early users and participants of the project, and we've been very involved since many years ago. I think 5 years ago we first started, and we did a lot of work to prove the infrastructure is fit for purpose. It's capable for transacting value. It's capable for institution grade adoption, and the work that we did was around netting settlement between banks and doing that on blockchain as a potential stablecoin. So we've done a lot of work in that space since 5 years ago, and what we're seeing is that experimentation phase of blockchain has stopped from banks, from institutions, from central banks. They've been experimenting. They understand the capability. They know what use cases are possible, but they also understand the value of blockchain, because what they're implementing is a new infrastructure, and this doesn't happen often. I mean, it's not often you create a whole bank and a financial system and a payment infrastructure. It only happens every 30 years. So what we're seeing is they've seen opportunity to implement DLT, to implement blockchain for the transformation of financial services, the transformation of finance, of money, of value. And using that infrastructure, they've understood that it lowers costs, firstly, because running all of these things on your side, so bank side or institution side, takes a lot of money and effort. I mean, issuing money on network, issuing assets, doing a bond, doing shares, everything in financial services is very heavy in terms of effort and costs to any business. Then maintaining that is extremely heavy. And think, lots of data centers with lots of kit, and they're running all of these applications and infrastructure just to be able to do a transaction. And if you look at blockchain, it does a similar thing, but at a fraction of the cost, because the infrastructure is built to be scalable. It's built to be trusted, because you have your nodes and each node trusts each other nodes. It's built to be secure because of the key management, the peer-to-peer network, and tokenization, hashes, and then the encryption. And there's a lot of work that's been done in LACnet and LACchain previously on quantum encryption, on a public good, on a public blockchain. So bringing all of those things in, it makes financial institutions trade and transact at a much cheaper and better way. And they're seeing the business case. And the work that we do is around tokenizing money and the settlement of money. And it's digital money, so programmable digital money from commercial banks, so bank stablecoin, or even bank tokenized deposits. And we've done work in CBDCs before with the Bank of England and the BIS and the ECB, for example. So what they're seeing is they're able to create new financial product and instruments that run on blockchain that are superior to what we've got today. They are able to run that at a fraction of the cost, and for them, they can make a lot of money from it. And I think that's the inflection point from moving from experiment to moving into real world production, mainstream adopt. And so for an infrastructure like LACchain, and there's been similar use cases in the EU like EBSI, that is a great foundation. That layer is a great layer to start building these institution use cases, where you're using that layer to create value and transact value and have programmable tokenized bank deposits, have programmable bank stablecoins, and run those applications on an infrastructure like LACnet. And the banks will do it because it's trusted, it's secure, and it's a lot cheaper than what they're doing today. And that's a great way. But the key of all of this is it comes back to interoperability, and it also comes back to standards. So it's very important to build out these use cases on these infrastructure with interoperability and standards in mind, because banks and institutions and consumers and businesses, we want to be able to connect and transact all around the world. We don't want to be limited to a small market or a small network. And that's key to making LACnet interoperable with everything else. We'll give it reach and give it access to new markets, but that's what's important to people using it, from banks or from customers.
Folks, Gilbert Verdian is one of those leaders, folks. We've seen Hugo, we've seen Marshall Hayner, we've seen a lot of these leaders who are hyperactive. Meanwhile, when it comes to Gilbert Verdian, he time and again comes in front of the screen, lets us know about the updates, but I've seen Quant Network be much more of the of that sort of project that believes in building behind the scenes, and when something happens, they simply announce. So it is that sort of a project. But whenever Gilbert Verdian happens to be in interviews. We've seen that spark. We've seen that spark in the team. We've seen what Quant Network can bring in the future as well. So look at this. If industry titans collaborate on a project using a patented technology with $1 billion market cap, retail would rush on their exchanges to get a piece of QNT. For now, obviously, it is undervalued, and for what it can bring to the space and to the world of finance, I think that the potential is there. Look at this. I will keep this account active for the next 5 to 7 years. QNT will be in that $5,000 to $10,000 range within the next 5 to 7 years as the asset matures and Overledger changes finance as a whole and Quant Network achieves their milestones. There's no question that this is a diamond. Obviously, folks, if the development consistently and persistently happens and the entire market is favorable, then obviously the potential for these levels are there. But look at this. If we talk about the fundamentals, Tokenizer over here says that 2025 has been quite the year for QNT evolution, from DLT interoperability to programmability all the way to integrating TradeFi compliant rails. We're talking about the upcoming tokenized deposit adoption, digital asset regulations, ISO standards finalizing, government DLT frameworks, enterprise blockchain offerings. All of this is happening, folks, and Quant has never moved in line with the crypto because it is doing something beyond that in the world of finance. They've always moved like a fintech enterprise blending into Web 3. So Quant Network wants to be the bridge, wants to be that invisible layer to connect both worlds together. And the Overledger ecosystem, the Overledger platform wants to do that in the process. Quant Flow, Quant Fusion, Quant Net. We're talking about integrating programmable money functions, sovereign digital currency, institutional automation, smart money, no code setup, interoperable layer 2.5 across blockchains. Look at this, awesome. Then we're talking about compliant rails to legacy in financial infrastructure by permission. When it comes to the blockchain, we're talking about permissioned layers as well as trustless layers, folks, and hybrid layers like XDC blockchains and networks like Hedera, Sui, Avalanche, Polygon, XRP Ledger, Ethereum, Hyperledger, R3 Corda. And then we're talking about legacy financial infrastructures like ISO standards, Swift, and others, folks. Now, this is what we're talking about. So, folks, do you think that Quant Network has the potential to be the invisible layer of finance as a whole? I would really like your opinions. Do hit the comment box below and let the community know. Anyways, guys, this was it for the video. If you liked it, make sure to like, share, comment, subscribe, and hit the notification icon if you're interested in utility coins and potential gems. And you can also support the channel by checking out Patreon by following the link in the description box below. Until next time, stay blessed and stay tuned. Thank you very much, everyone.